Okay, long on a really volatile day here. Already at scratch and now scratched out. We did have a short up here that I ended up erasing the code because I reapplied the study. But I think that I wanted to check to see it. That may have looked a little noisy to the system. It wouldn't have gotten it filled anyway, but man, that was a sweet prediction. More than 100-point overnight move last night, more than 100-point overnight or move yesterday. So really volatile conditions. Time to be really careful. If I was a human trading this, I would almost certainly not be doing anything, just standing aside. And as we discussed in last night's video, I'm going to stick with the moderately aggressive set of codes through next week, just as really part of the experiment. All right, but beyond that, if we stay volatile, I'm going to switch over to conservative. All right, very likely. It depends on the result. You're much more subject to the random roll of the dice when the markets get this volatile. And that randomness can work for you or against you. So when it works for you, since we don't limit our upside, it can be pretty nice. When it works against you, you end up getting crushed and hitting your max loss pretty quickly. All right, so filled long again, and it's scratched now. We would have liked to have seen some shorts on those pullbacks, but instead it looks like we're going to get about 10 ticks here on the turn.
Order filled.
All right, so a good example of the trailing too aggressive here. I got stopped out to the tick before it pulled back and went my way. So again, we talked about this in last night's video also. That's the Thursday, March 22nd video. We're finding some really good entries, but then just the trade management needs some work. That's not really anything to do with the machine learning system. That's just choosing how to use the what order type to use in CR chart and how to tell it to trail. So short on the ES, one of them already got scratched out. This one here is the top one's going to take a loss now. So the top one is be more aggressive with your entry and use a closer target. The bottom one is place your order one tick back and use a further target. And so in this particular case, because you got a better entry, you scratched out, whereas the top one you took a loss. And I'm just sitting here painfully watching the market climb higher after this gorgeous prediction down here to get long. I got stopped out to 1 or 2 ticks. Okay. So order placed long here in the NASDAQ, but not filled right there. Okay, so let's see now if that's a tragic miss or not. All right, so filled short here in the NASDAQ on super volatile, major abrupt reversal day here. And scratch and scratched out just like that in seconds here. Placed short again, and this time didn't get filled because it fell apart. So another example of getting aggressive with this trail stop, missing the trade here. So I actually think that the market is so whippy and crazy and volatile that you have to be this aggressive right now, or just don't trade. We can't have 100-point overnight moves, 100-point daily ranges in the NASDAQ, and expect to trade it with 10-tick stops without being super careful. So order placed long That's not, now it's scratched. God, it's really whippy here.
Order filled.
Scratched again. Taking a little bit of slippage on those stops too. 1 tick of slippage because that entry is, the stop has moved to entry +1. But it's actually filling at the entry itself. Okay, here we are at the end of the day now. This is where I stepped away. I was actually up nicely at one point, but I ended up the day down. Where is it? Down 120. Very much the hallmark of a volatile market. So let's take a look and see. We see this short here, but get taken out on just the volatility as with the stop management is very aggressive here. I really think that it needs to be, because the market is just it's making really wicked reversals. There's a long down here where we scratch, a beautiful long here with a really nice exit actually, because this is really a deep pullback right here, right there. Okay, so then let's see what happens next, right? Because this looks okay. I like what I see here. And then what we see is, let's see, this 185 is in that too aggressive category. Or it might, actually, that's not true. This is, okay, so actually, there's 2 elements to the sideways market, right? One is that when it's choppy, you don't want to get in, right? But the other is it can appear sideways, but really it isn't, because the moves are big enough. And so kind of the mechanism we're using to stay out of the chop and the current volatility is very much just a traditional sort of moving average and look at the slope. And if the slope is too big, if the slope is too small, then stay out. So that's very much what you're seeing here. That's sideways. And so we end up not taking that gorgeous 201 trade. You're going to see this 201 over and over and over again today, as the market really, really cleanly sees that turn. Here's the opposite, 10, or not quite the opposite. Here's 102 getting long. Here's a case though also where that's sideways, okay, and that's a 185. That's going to get you long. That's a gutsy trade, but you'll be okay. Actually, you may get stopped for scratch right there, because it's really jittery. In any case, when I look at that, as I'm evaluating how to deal with the chop, what I see, there's 2 sides to that coin. One is when you want to stay out, and the other is when you don't. Okay, and so when I look at this, I go, yeah, that makes sense to me to stay out of that trade, because you really can't tell what's going to happen there. Further along though, look at this cluster here. So this I absolutely really, really don't like. What I can see is that I improved it, that incremental improvement we talked about with once the foundation technology is in place. I can see that improvement here, because these entries are, 3 of these 4 are scratching, whereas before they were all taking big losses. Okay, they were all hitting max loss. So it's gotten better. It's nowhere near what I think it needs to be. When I look at that, what I see is this looks okay to be, after this pullback here, so this pullback, okay, yeah, you can try there, either a success or failure, but in here, it's really time to stop, okay? So there's a chop issue there that we're working on here. It's much more difficult because of the volatility. All right, let me get rid of this funkiness here. What do I do? There we go. And because of that, we're feeling it more severely. Another super cluster here that this is a big problem. All right, so you're pulling back and then try, and that's not a chop issue. The trades are too aggressive for the market. All right, so what these are the system saying that this pullback long is going to fail. All right. And so what you see when you model that is that by itself, in isolation, over time, that's a solid signal. The problem is that when the market's moving like this, making these, you're moving really strongly in a direction, whether it's one direction or another or both, then you need to stay away from those trades. It's too aggressive. All right, so what we're going to do here is I'm going to finish up this little commentary about this issue, and then I'm going to stop the recorder, and I'm going to do a replay. And in that replay, what we're actually going to do two replays. We're going to change this set of codes here. So this purple area represents, these are all the different kinds of market behaviors I'm willing to go after. All right, and what I'm saying is that some of them are too aggressive for the market. I was going to just keep it moderately aggressive like this through next week, but I'm questioning if we should do that. So let's just do this experiment together, and then we'll decide. So instead of this moderate group, I'm going to switch to the conservative group, all right, and replay the week. And I'm going to do that two times. In one time, the first time, what we're going to do is we're just going to leave these settings the same. We're going to leave the limit entry offset at 1, okay, and let it go. And then we're going to do it again, and we're going to set this to 0. Okay, this here we're going to set to 0 the second time. In other words, don't require that the market come back even at just a couple ticks to fill you. Go in as soon as you see the signal. Go in, place the order at the close of the bar, and try to get filled right there. All right, even more aggressive would be like a market order, but I'm not going to do that. You could just do. I'm not sure if you put -1 in there if that would do that or not. Anyway, we're going to leave it the same. All right, place the order one tick back from the close of the bar, and then the second replay we're going to change that to 0 and see if we can see if we do better. Because what we're seeing is, particularly as the market peaks out and rolls over, we're not getting filled. There's a bunch of times here where 201s are showing up, and 213s are showing up, and we're not getting filled because it's just falling too fast. All right, so let's do that. I'm going to stop the recorder now, and then when we come back, we'll see the results of those replays. In fact, what I'll do here is actually show you the setup, particularly for the members that just got the system on Wednesday, so they can start playing with this. Would be good practice. So the first thing we want to do is turn trade simulation mode on. Okay, so now everything's going to be done internally in the client software here, in the Sierra Chart software. But we have to do one other thing before we can do a replay, and that's we have to tell the auto trading system to use the internal simulator, to not try and send the order out to the broker. All right, so to do that, we go into the auto trading study, the spreadsheet study, and we want to change send orders to trade service to no. Okay, so now we're set up for a replay, and what we're going to do here is go to trade. I always just do this to be safe. Clear trade simulation orders and data, and then go to trade, and then go to the chart menu and do replay chart. Okay, now there's a couple things here to pay attention to. You want all charts in chart book, not just single chart. It defaults to single chart if you've not done it before. So change it to all charts in chart book. Okay, and you need accurate trading system backtest. All right, not standard replay. All right, and then click the use start date and time, and we want Monday's date here, which I don't remember what that was. All right, so that was the 19th. So we want to start at the 19th. At 6:30. The speed you can crank up unless you want to watch it. More than 480 or 960, I don't believe that it can actually go any faster than that. It gets limited by your CPU. Okay, so now you're ready, but there's one more thing you got to do if you're using the machine learning system, and that's you got to restart the server. Okay, because the server's got all of today's data in it. We want to wipe that out. Okay, so to do that, I've got two running, one for the ES. Let's close them both. All right, and now I'm going to restart the server, and then we're going to be ready to go here as soon as I can find it. All right, so let's start the server. This is the machine learning server that will actually give us the predictions. All right, and that's starting up. We're going to wait for that to say starting on port, and then we'll be ready to go. No, actually, silly me, while we're waiting for the server to start, I didn't change the code, so that's kind of silly. So it's easiest just to come and select this entire group and do clear. Okay, now they're all gone. And then we're going to go over to sheet 1. Let's grab our list of conservative codes. Okay. And we're going to copy value. And then switch back to the auto trading sheet and just right up here do paste. Okay, so now these codes are going to go. I like to keep that set purple, so I'll just change it back to purple. Whoops. Okay. And now we're ready to go, I think. Is the server up? Yeah, starting server on port 880, so that's ready to go. Let's get this back up. Let's get the replay back. And we're going to hit play. It's going to load everything up here. Change this to 1, enter processing step in seconds. And then that's going to load up, and it's just going to start at Monday at 6:30, and it's going to run. It'll take a while to run. And so I'll just come back in 30 minutes or so. All right, you don't have to wait, though. All right, so here we are at the end of that first replay. Friday ended up minus 3 ticks. Let's see what the total is. Trade activity log. Close P&L, down 80 for the week. So a little bit better than I actually did. Not a lot better. Not what I would expect. All right, so now let's do it again. And this time we're going to change that entry setting. So we're going to come back to the spreadsheet here. We're going to change our setting. Let's get this out of the way. We're going to change this limit entry offset to 0. Okay, so we're going to get in more aggressively now. Leave the stop the same. Okay, and all right, we're ready to start this now. Appropriate music in the background. Here we go. And again, I don't think you actually need to do this, but I'm going to clear the previous simulation. Because it asks you. I don't think you have to do it again. Still using start date time, starting on Monday at 6:30. Play. Yeah, see, it asks you to clear it again anyway. So set that to 1, and off it goes. Okay, so then we'll come back at the end, and we'll see if we do better or worse. And from this, we're going to make a decision on how to proceed next week. Okay, so here we are with the results. Trade activity log. So plus 60. So not better, right? But still not very much when you consider that it's a whole week and the massive, all the massive moves, right? This should tell you something about how difficult it is to deal with this kind of environment. But now let's examine kind of the power of the tool, all right? So one of the things that we were talking about is that we're leaving quite a bit on the table. So let's do this. Let's go to the trade order, and let's change the target. All right, let's make the target. I would normally do 40. So let's make it 40 and see what happens, and we're just going to try that. Okay, so now our target is 40, and let's do the replay again. All right, you get to come back in a few seconds. For me, it'll be about 30 minutes. Here we go. All right, and here we are at the end. Let's take a look. Trade activity log, 150. Okay, so clearly better. I think maybe it would be beneficial to try a greater amount. What I would typically do in volatile environments is double stops and targets. So let's just try to double the target and see what happens. So to do that, we're going to go to the trade window. Let's make this 60. I'm going to leave the stops at 10 ticks though, so we're going to stay conservative on the stops. Let's see if we can catch those bigger runs. Hard to say what will happen here because we're trailing by 20, right? Let's see. Actually, we're trailing by 15. I'm going to change that to 20. So let's trail by 20 because I want to give it more room to try to catch that 60 tick move. And we will, so this is correct now. So let's just redo it again. And again, you get to wait just a few seconds, whereas for me it'll be a little bit of time. It takes some time to do this. All right. Okay, so now this is done. Let's take a look. Trade activity log. Minus 65. Okay, so trying to go for more, we end up not making as much. So the other thing I want to try here is we're going to go back to 40 ticks. And then what you're seeing here is the power of the tool now to help you evaluate what to do. The conditions are so unusual now. We need to do some work to figure out how to proceed. And what I want to do is I want to keep that stop at 10 ticks. But what I'm going to do is instead of when I get to 10, moving the stop to entry +1, I'm going to go -5. Okay, and I'm doing this because I saw in batch simulation that you often are better off if you give it more room. So when it, you can see, if you've been watching daily videos and even today, you could see where it comes back and gets you before it rolls. All right, so it's very common, right? We actually look for that entry as a discretionary trader. We call it a vacuum pop entry. All right, so let's try this now. 40 tick target with a stop move to -5 at +10. And then the step 2 is at +20, we start trailing by 20. I've been doing that trailing by 15, so let's do that. All right, and let's give this a try now. Here we go. And once again, you get to just see the results in a few seconds, whereas it'll be a little while for me. Okay, so that has finished. Let's take a look at the result. -35, so basically scratch. So not useful in the current environment. It very clearly was better in sort of normal environments. So there's one more test I want to run. I'm not going to tell you what it is. Let me do it, and then we'll look at the result, and then we'll back into the into what the settings were. Okay, so stay tuned. Okay, so let's take a look at this result. Trade activity log. So 280, close P&L, much better than what we've been seeing. This is actually a rather disheartening result, though when you think about it, on a $5,000 account, that's more than 5% in a week. The reason is that in order to achieve that, I did something which is really sort of against my philosophy. So here's what I did. I limited the gains. Normally, what I do is, this is the max loss limit value here. And what I noticed when I first started real-time trading, they were still pretty volatile conditions, I implemented this max loss limit, and I normally have it at 400. So what I noticed was I was getting 20 points or more and then giving back too much. This week, the volatility even worse. And what I did on this last test was I limited it even more, in part for the same reason. What I noticed early on in the week is that I was getting up and then giving it all back, or giving some of it back. In some cases, I was up nicely and then actually come back to a loss. All right, so this is not acceptable. All right, or rather, it's not what you want to see, and generally, that's the result of markets that are very volatile. So. I don't like that. Really what this is telling me is the markets are too volatile to trade. but I kind of knew that already. So this is more a way to quantify that. I think what we tend to do as humans is we'll see, hey, this was a good trade, that was a good trade, here was a good run, and you sort of notice the ones where if you had you gotten in, you would have made a nice profit, but then you don't notice all the ones where you would have taken a loss. And so this is a way to completely remove all of that ambiguity, all that subjectivity, and look at things in a much more logical and objective manner.